Hey, everybody. Welcome to our hot stock panel. Thank you, Joey, for making me do a double take. My name is Glenn Tompkins, Senior Instructor here at VectorVest on our YouTube channel. This is one of our most widely watched live streams every month where we do the hot stock panel. Stocks for you guys to take a look at. Keep in mind, we're going to talk about why we like the stocks, what to look for before you buy them, and of course, how to manage them and get out of them at the right time. But this is for the new year. Happy New Year to everybody. This is our first hot stock panel for the year, right? 2022. For 2022. So happy New Year to everybody. And these are stocks to consider for the new year. Stocks to consider for the new year. So sit back, relax. I've got two great coworkers that will be presenting with me today. They'll come up in a moment, but they're amazing individuals. At least one of them is amazing, and the other one is okay. So now they have to figure out between the two of them
I know who
where
you
they
mean,
stand.
Glenn. I know exactly.
This is going to be awesome. For the rest of this presentation is going to be amazing. Trying to figure out who they are. If you're brand new to the channel, by all means, I invite you right now to hit the subscribe button. And don't forget to hit the bell icon so that you'll be alerted to when new videos like this come out. And of course, if you like the content, folks, hit the like button, especially if you like what they have to say and I have to say. It's all about teaching you something and getting you all prepared for the new year. If you can hear me, by all means, please respond in the chat. Not only that, let me know where you're tuning in from. I see that Badger is here. He helps us out from the moderating perspective. So here we go. We are in Glenn. It doesn't show up. Okay, it says we are in Glenn and Joey's house. Put on your thinking hat and get ready to find the profit in today's presentation. Fun for all. Thank you for that, Badger. I appreciate it. So again, not only tell me if you're hearing me loud and clear, but let me know where you're tuning in from. I've got New Hampshire. That's all the way up in the north. I'm New Hampshire. Got Arizona. Does it ever get cold in Arizona? I guess it's desert, so I guess it does get cold. We got Atlanta. We've got Fort Lauderdale, Sun City, Texas, Quebec. I know we got a lot of Canadians here watching from Smyrna Beach, Florida. Gotta love Florida. Gotta love Florida. We would have been in Florida and it would have been nice, but it didn't happen. Albuquerque, New Mexico. Joey's from New Mexico. Where are you from in New Mexico?
I wasn't born in New Mexico, but southern New Mexico.
Southern New Mexico. Artesia. I ain't never heard of it. Is it a real place?
It is.
All right. I'm just asking because sometimes I don't know if you're really real. Dallas, Texas. Roger says, yes, it's often been under 20. I guess that's in Arizona. Burlington, Ontario, British Columbia. So all over. I love that we've got people tuning in from all over the country, hopefully all over the world. Tierra del Fuego. That don't sound like America. That sounds like something on fire. That's whatever it is, it's on fire. All right. So with that,
you just like it because it's fun to say.
Belgium. There we go. Guido is coming in from Belgium. Oh, wow. Lawrence, you can't say that. I got to put Lawrence in time. Do I need to put Lawrence in timeout? All right. Sound is going in and out between left and right ear, Joey. That could be me. I got to just stay where I am. All right. So hot stock panel, we're getting ready to get into it. Thank you guys for letting me know that you can hear me. We're going to jump right into the VectorVest software so that you can see what's going on. And then from there, we're going to go on. So which one? That's not the one. I guess that's the one I want, right? We'll leave it there. So we always start off with what's going on in the market. And I think that as each of us talk a little bit about what's going on, we're going to keep that put that into perspective. The market right now, if you're looking at our color guard, it's kind of all over the place. We've got yellow, we've got red. Today we've got green. So the market's having a hard time really substantiating a direction. Is that a good word, Todd? Substantiating?
Sorry, I was muted. So yeah, roll with it.
All right, we'll roll with it because Glenn has a way of creating his own words.
The answer is
Send them
no.
to your
Glenn.
will.
Todd was being kind. The answer is no.
Okay. Anyway, I'll get to that. I'll get to that. There's a flow.
Probably shouldn't ask them questions if they don't know who's there.
Well, leave me alone, Joey. Say hi, Joey, by the way.
Hi.
All right. Gosh, I got a tough crowd here today. Listen, I almost lost my Jesus this morning in the Jockey Club. Don't make me lose my Jesus now here, too. All right? Don't let me lose my Jesus. All right. So if I'm looking at the homepage tells me it's just be careful about what you do. Did you really say go Bulldogs? Really? Really?
Bulldogs, yeah. He said he was from Artesia, New Mexico. Can you believe that?
Oh, that's a different Bulldogs?
No, well, go ahead, man.
Okay.
You're losing everybody.
I'm losing everybody. Oh, wow. All right. So we got a mixture of what's going on in the market. Patrick just did a video on our YouTube channel talking about a possible bullish divergence, things to just keep a lookout on overall. So from the market perspective, we're still going to tell you that be careful. Be careful because there's a lot of things going on to make the market do what it's doing. So
All units.
all right, let's go see. Can you guys hear me? Sorry about that. I know the screen just shot out, lost the signal, frozen up. Let me know. Can you hear me? I just want to make sure. I know it's a little. Your feed is totally buffered. Screen is blurry. Yes, I'm back. All right. Sorry about that. This is why I have Joey. Joey is an amazing individual when it comes down to this kind of stuff. All right. If anybody's saying that the screen is fuzzy, you can refresh it. Go down, hit the cog on the bottom of the video, the machine cog. Click on it. You can refresh. All right. So for anybody who's saying that the screen is fuzzy, you can refresh, and that should take care of it. All right, man. That was back quick. Thank you, Joey. That was back quick. All right. So this is what we're gonna do. We're gonna go to the viewers tab. Here's our hot stocks for the new year. And my two people that I have on, and Joey's don't put them up yet, and my two people in the background will be Todd Schaefer, and we will also have Jim Penna. So between the three of us, here's the 7 stocks that we're giving to you for the hot stock panel this week, this month. They will come up momentarily to talk about their stocks, but I didn't want to hold that back any longer. My two great co-workers within Todd Schaefer and Jimmy Penna. What stock on natural gas have on site? Right now, I don't think any of us picked any natural gas. I think we did pick an energy stock when you look at ConocoPhillips, but I don't think we picked a natural gas stock. Remember, we only had 7 stocks that we were going to give to you today, and I think that we really did do a good job in the stocks that we picked. We did pick out some really good stocks. So I'm going to start off with my first 2 stocks, which are Apple. Everybody knew probably I was going to do Apple. And Wire, which is a stock that's been hot, but it's copper wire. Copper wire, and I think that there's nothing, whether it's from infrastructure, whether it's for new building, especially houses going up, all of that kind of thing, copper wire is still going to be something that's going to be used all over the place. So I've got Wire, and then, of course, I've got Apple. I think Apple is always going to be a good, strong play no matter what year it is. It just was the first company that hit $3 trillion in market cap. They were the first one to hit $1 trillion out of all of the stocks out there. Apple is just a powerhouse of a stock. And again, I don't care what year you're in. Apple is going to always be a pick of mine that I like. Now, real quickly, as I've got these 2 highlighted, I'm going to analyze them with some of the specific things that are only germane to the VectorVest software. Things like value, relative safety, relative timing, VST. And just from the perspective of using those indicators, how we analyze stocks better than anybody else out there. We can tell you if the stock is under or overvalued. Value is what we feel the stock is currently worth. Wire is trading at 131 with a value of 194. Clearly undervalued. That's a good thing. We want you to be in safe, undervalued stocks that are rising in price in a rising market. Well, this fits that. Right now, it is undervalued. Relative value is the stock's long-term upside potential as compared to a AAA corporate bond. You buy a bond, it matures. After it matures, you get all your money back with a little interest. So we're going to use that as looking at the market overall. So it's a safe investment. It's going to make you money as long as you're in good bonds, not junk bonds. But if you're in good AAA corporate bonds, these are, this is a good guide of, well, will Wire outperform that AAA corporate bond over the next 1 to 3 years? Then these 4 or 5 indicators that I'm going to talk about are all cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. RV on Wire at a value of 1.78 tells me that this stock, Wire, should outperform that AAA corporate bond by 78% over the next 1 to 3 years. That's good upside potential. So for a stock to look at for the year, that's a good stock to keep your eyes on. Relative safety is an indicator of risk. Relative safety above the value of 1 is a stock that consistently meets or exceeds the earnings expectations going forward. These are companies that consistently meet or exceed their earnings expectations. Earnings is the engine that drives the stock's price higher. Wire's got a relative safety at 1.43. Really good safe stock. So for a long term or looking for stocks for 2022, that's a good call. RT, which is our technical indicator, looks to tell me if the stock is in an uptrend or not. The higher above 1 RT is, the faster in an uptrend the stock is considered to be. So Wire has got a relative timing of 1.04. It's above 1. It's not screaming higher right now, but it still is in an uptrend. And then we take all 3 of these indicators, RV, RS, RT, tie it up into one indicator. This is our master indicator for ranking stocks. Again, on that same scaling, VST above 1, good quality stock. Again, for the purposes of looking for long-term stocks for the year 2022, look at all of these stocks that we're looking at have a VST above 1. Look at the RVs, all at or above 1. The relative safeties, though, may not all be there, but altogether, these are good quality stocks. Earnings per share. We forecast that our earnings out a year from now. So our earnings per share on Wire is $10.10. We're saying by this time next year, that's where their earnings should be. That lets me know, is it growing or not? That's a good thing. And there's the earnings growth, 38% over the 38. They're growing their earnings at a clip of 38%. Let's do the same thing for Apple. Now, Apple, on the other hand, is trading above its value. It's an overvalued stock. That doesn't make it a bad stock. It just means that people are willing to pay a premium to own the stock. Well, everybody knows about Apple. People are willing to spend more on Apple than what it's worth. Okay, fine. Let's look at the next thing, relative value. Relative value is at 1.42. The stock should outperform that AAA corporate bond by 42% over the next 1 to 3 years. Relative safety. This is also a safe stock above 1. This company meets or exceeds its earnings expectation quarter over quarter, year over year. Relative timing. This stock, Apple, is in a faster uptrend than Wire, where RT is at 1.35, and look at the VST, right in line with Wire as well at 1.36. Have an earnings per share of $5.75, growing at a clip of 24%. So both of these stocks, no, one is a buy and one is a hold. Wire is sitting at a hold right now, but still a good quality stock. Nonetheless, that's still in an uptrend. Could be pulling back, but still in an uptrend overall. Now that we've analyzed the stocks, again, this is the kind of information that I need to make a better decision in a stock that I'm thinking about owning for the year of 2022. I'm going to right-click and I'm going to view the stock graph. Let's pull up these 2 stocks, put them on a 1-year graph. This is my layout. Big thing for me is if these are longer-term stocks, I'm looking at a 50-day simple moving average on the stock. All right, EMA, a simple moving average, a 50-day moving average. Overall, the stock is moving from the bottom left to the top right. And, you'll hear in the news, hey, Apple's getting killed. Oh, Apple's looking great. Apple's getting killed. But overall, just look at the trend. The stock is moving from the bottom left to the top right. Right now, even with the most recent pullback, look where it pulled back to. Right to that 50-day moving average. And what did it do? Bounced up and still moving higher. Volume has been pretty steady over the year. The stock trades a lot of stocks to a lot of shares. Look at the earnings per share. So remember, our earnings is forecasted out 1 year. Look at the rising stair-step value on earnings. The engine that drives the stock's price higher. Look at the earnings growth over the last year as well. Still, both of these put together, along with just Apple being Apple, is just, I think, is a good pick going into the current year. Before I go on to the next stock, I'm going to bring my two co-workers in, Todd Schaefer and Jim Penna, and let them give some feedback that they see as well on the two stocks. So start with you, Todd. What do you think? Oh, you think Apple is great? Great. All right, we'll talk to Jim. You think Apple is great too? Great. Let's go to the next stock. Okay, go ahead, Todd.
It's really tempting to just hate it just because you love it. So just to burst your bubble. But, Apple is Apple, of course. And I like the retest of the 50, and you come down to a little W, double bottom in the most recent price action. You're coming up, the volume's fallen off a little bit. That's a little bit concerning, although it's still within the average, I think. So that and earnings forecasts continue to impress. Growth has fallen off, but that on a rate of change basis, that's an uncommon. As you get to the higher the number, the slower it moves higher. So there's nothing to complain about that. And Apple's Apple, right? The big question will be really and this is kind of macro sense, what happens in the macro with the valuation and therefore the price if we continue down the inflation road. But other than that, great play. Just keep on keeping on.
Jim?
Yeah, I think Todd is right. Apple is Apple, right? I'm very rare I'll ever bet against Apple, and the numbers are obviously good. I guess if you look forward, I think iPhone 14 is supposed to come out this year. I see some other good headlines about it. It's hard to go against Apple at any point.
All right. We've already done the analysis on Wire. Let's just take a look at the graph. Even compared to Apple, it hasn't dipped below the 50-day moving average nearly as much as Apple has. And Apple did it a couple times more. But look at that, 50-day moving average towards the beginning of the year, along with rising earnings and earnings growth. It dipped down below, but even with that, look at the stair-step effect on both of those. And remember, we always say that earnings is the engine that drives the stock's price higher. Even when it fell, look at the rising earnings and look at what the stock did even after that. Bam. How about here? Pulled back. Look at the rising earnings. Bam. Bounced off the 50. And it did it again. So it's become a little bit more elusive as price has gone on right now, but still keeping right in line with that 50-day moving average. But this is what I really like, the rising earnings per share and the rising earnings growth. It is pulling off a high. If I'm looking to get into it now, first off, I'd like to see it get back above the 50-day moving average, rise back up. If I need more confirmation, I'd look at if it goes higher than the high. I would rather to wait and buy it right now as long as it goes above the 50-day moving average on good volume. The earnings and earnings growth is already there, and I could use that as a way going into the oncoming year. I would use that level of the high, though, as some semblance of a level of facing headwinds. If I got in when it went above the 50-day moving average, I would then probably take some off at that level of the high and let the other half run. That's what I would think. I would wait right now. I like the graph over the last year. I would wait right now until at least got above the 50-day, back above the 50-day moving average before I pull the trigger on it. The earnings growth and earnings per share look really good. All right, Todd?
Yeah, so for me, we're in a little bit of a consolidation here, right? A little triangle pattern. So I don't like also the only above average volume you had over the past several weeks now is the two big sequoias for bearish volume. So very important that support holds, but I'm waiting on my entry. I'm looking for something more like a trend line break.
Okay.
But I'm a little less aggressive than you are, so.
Understood. All right. And that's why I love having other people on here, because it's not all about me. Most of the times it is all about me, but right now it's not all about me.
Even when it's not about you, Glenn, it's about you.
All right. Jim?
Yeah, a couple of things on this stock. First of all, I almost chose this one for today's session. I think if you look at a lot of these highs, you had Apple up there, not quite as apparent there, but a lot of stocks hit these highs and are kind of moving sideways. That's an overall market view. But I don't know if you want to, you don't have to, but if you pull up ruler stocks right now, you'll see that Wire is the number 3 stock on ruler stocks right now in the Unisearch tool. You're right. It's there. It's the number 3 stock because of its relative safety and its earnings growth rate. When we combine those, that's how we sort them. So it's the number 3 stock right there. Yeah, I'd buy it now, right? I mean, if you're talking about the year, you got a green light in the price column. If you want to wait, I would adjust my purchase point more to the overall market than to the specific graph on Wire. Looking at it from a little bit more of that outlook on it. But does it pay a dividend? I don't know. Check my screen here. It pays a very small dividend, but yeah, I love the stock. It's a ruler stock. I would, again, it wouldn't take me a whole lot to put that into my portfolio now. Now, if you're being more prudent from a retirement-minded standpoint, you might wait till a confirmed up call. But I love the stock.
Excellent. All right. So those are my 2 stocks. We will move over to one of my good friends. Both of them are my good friends, but remember, one is awesome and one is just okay. So we'll let them fight that out. My next presenter will be Todd Schaefer.
Can't we be awesome and awesomer?
You can be, all right, fine. You can be awesome and awesomer. Who's going to be awesome and who's going to be awesomer?
It's okay. You can tell him you're talking about me, Glenn. It's okay.
I would never do that, Jim.
Big boy, I can handle it. I can handle it.
All right, let me drive this bus back to the home page. Show me some control here.
I believe you have control. And allow it. Tell him who you are and what you do.
Oh, I'm Todd Schaefer. I'm the manager of research for VectorVest. I also coach the Successful Investor group as well as the educational forums that go along with that coaching level. And I guess other than I've been here for 14, going on 15 years now, I suppose. That's about all I can share with you that is of import, I think. You tell me if there's something I missed.
Todd.
All right. So for me, when we're looking at hot stocks, it's all about momentum plays. Excuse me. So momentum for us in the VST world is all about RT. And anyone who has followed me for any length of time knows that I love to look at top performing industries and sectors. And so the first thing I'd point out is right at the bottom right corner of the home page, Glenn has listed the top RT sectors: steel, bank, metal products, petroleum, REITs. Of course, if you go to the sector viewer on the viewers tab, you'll see all of the sectors, and for that matter, all the industries on the industry viewer ranked by RT. So I like to certainly, if I go to the viewers tab and I go to the sector viewer, I'm playing here with the resolution, so I apologize.
What you trying to find, Todd?
Trying to get to the sector viewer. There it is down there. So remember, the VVC is the average of all of the stocks in the database. So when we get to the sector analysis, there's the VectorVest composite. So any sector that's listed above the VectorVest composite is outperforming the market. If it has an RT value, the sector is in uptrend. So that has a cutoff here of building and above. All of these sectors are outperforming the market and they're in uptrend. So I love to stay in that universe when I can. Of course, if I find an outlier, that doesn't mean I can't trade it just because it's not in the top performing sectors, but that's a great universe of stocks from which to choose, or a pond to fish. All right, so back on the home page, we also have top VST stocks. You can do top Midas touch stocks here as well. But going over to the viewers, you'll notice my 2 picks are both top sector picks. Watch list viewer. And which watch list was I in, Glenn, before I butchered your presentation?
Hold on right here.
Perfect. So let's start with ConocoPhillips. And the VST analysis real quick. 84.37 is the price, valued at 113. That's favorable. Good upside potential at 163. Average safety in a nice upward price trend. Favorable VST score, currently buy rated. They're making money, right? So I like to see positive earnings. And they have an earnings growth rate of 40%. The other thing I like to do is, even though this is a momentum play, recognize that I'm coming into the data and finding shares that have good fundamentals beyond being also momentum plays. So here I have sales growth, which is the other piece, particularly if anybody lived through the 70s. If we're going to be in a high inflation environment, we need companies that are still growing their top line and still have positive earnings growth in excess of the hurdle rate. So I've got some great sales growth numbers here on ConocoPhillips. I like the numbers, or I like that VST analysis. So now let's go take a look at its graph. And I think I have a layout in here. Again, on these momentum trades, these hot stock trades, I have a graph layout that I like to use that helps me analyze the stock on that basis. I like to look at a 6-month window on the graph. I don't even need to buy, sell, hold so much. I'm looking at the price. I have a 20-day moving average now because I'm in a shorter time frame. I have support resistance on the chart. Then I also have RT, earnings per share, and volume on the bottom, and I've added a 20-day moving average to the volume. So if that's the 20-day average of volume, that's a nice little reference point to see if I'm trading at or near average volumes. So what I'm looking for is price pattern, and looking from the 6-month view, we see that I'm at a 6-month high. We had a little consolidation period through here where we established resistance. Price broke through that resistance and now is putting in new highs. I also like to snap back so I can see if there's any resistance on the left. And so we're pretty clean. I'm not sure what these lines even are here. Let me get rid of those. All right, so we've taken out, maybe it was supposed to be this one. You see that previous high? This is the benefit of looking back to the left to find previous resistance levels. All right, so not only did we take out this swing high, which was pretty well in line with our prior all-time high, we're now putting in new highs with RT accelerating. I'll zoom back in. RT is accelerating in the near term. Earnings per share still rising, and even from the 1-year look, so I've got some fundamental strength here on above average volumes, certainly helping support this most recent price move. One other thing that I liked about ConocoPhillips is back in that 5-year look, and I compared this. There were several, you know, if you did a hot stock search in the Unisearch tool, what, 80% of the stocks coming back are in the oil patch. But I like that even in the COVID swoon, ConocoPhillips remained profitable. They suffered, but they remained profitable throughout that sweep. So I'm taking a little bit more of a more conservative approach, or more prudent approach to momentum trades. But ConocoPhillips checks off a lot of the right boxes for me. So where are we going next? Is it you, Glenn, or is it Jim first?
I'll go and then Jim. I like that on this 5-year graph, the stock is taking out a 5-year level of resistance. That's good. Petroleum is on the rise. I like that. I like the earnings per share. The RT is bouncing around, but currently bouncing off a level of 1 and rising, along with the price hitting a new 5-year high. I think that long term, that's a good play. I like
well, remember,
that.
This is weekly now because you're in 5 years, right?
Oh,
so
okay. But
you
look
come
at
back
the
into
trend.
the 1 year or even the 6 month, you can see that acceleration.
And look at that trend. Look at it move higher. I like that. Earnings per share, again, we always know it's the engine that drives New 5-year high is big for me. I like it from that perspective. Jim?
Yeah, I like it too. I like the way the earnings look. The relative safety is not, quite where I'd like to see it, but going back to what Todd talked about, the industries and the sectors, I think it's a great play. Again, I'm going to ask again. I don't think we have dividend on the template here over on the right on the control panel. I was just curious if it pays a dividend, but petroleum stocks, energy stocks, I like them. I think it's a great pick. I was going to do Devon Energy, as a matter of fact. I didn't add it to mine, but that was one I was considering doing as well.
It does pay
Yeah,
a
it has a
dividend.
2%
It
yield.
does pay a dividend, and it's got a nice yield. So there you go. On top of the capital appreciation potential that you have there with a really strong relative value, the growth rate is unbelievable, and you get a nice 2.1, almost 2.2 dividend yield. So
And the
yeah,
earnings
love
yield
it.
more than pays for the dividend yield.
Yeah, I like it.
Yep, and the others that I were considering, I think the best RS I had was 1.3 maybe, but that was fairly average for the group, for the cohort, so that worked for me. The only thing that gives me pause is, oil's at $80 a barrel, so they have some pockets already, in the till for this next earnings season. Whether or not we still have some upside would be my last reserve, but this is all about momentum plays. And so just make sure you have a stop in case you get the pullback. All right,
Yeah,
so
for any of these, you got to have that risk management in place. So there's no doubt any of these industries can turn at a dime, but that's the way they are. Have that risk management technique in place.
I agree.
my second pick was Canadian Imperial. We're in the banking sector now. That was another one of our top RT sectors. So we're priced at 128, valued at 143, so undervalued, favorable. RV at 138 is favorable. RS at 1.01, let's call that even, right? Average for the database. Good upward price trend. BST at 1.29, buy rating as well, 20% annualized growth rate with a positive earnings per share. Again, while we're here, this one is yielding 3.71 with a 62 dividend safety score. But if we scroll over to the right, sales growth at only 9%. Of course, we're in the banking sector now, right? So we don't have stellar numbers like that necessarily. But one of the other things that I did see in the research here for Canadian Imperial is that they have a new line of business in the US for commercial banking. So that will hopefully have a positive impact on sales growth as well. Let's look at the chart. On a 6-month window. And so you'll see some of the same overlaps here. Price is getting a little overextended here. I grant you that. But we have price coming back up off of this resistance, taking out this swing high. Let's put a freehand line here if I can get with the time lag. Something like that, taking out that high. Probably should just draw a horizontal line. So we're back up at new highs, accelerating RT. Nice earnings trend over the 6-month period. Volumes, as I was looking at this, were average, right? But again, building as we supported this upward price move. As I start looking left again, there's the 1-year look. There's the 5-year look. We see a little consolidation here. We were able to eke out the higher high, but that's the breakout in any case. And stable earnings. We had a little swoon here with COVID troubles, but earnings back on track. That's my play in the banking space.
You know why I like the banking play? Because everybody knows, and I've heard Jim, I know we've had this conversation. I think that once interest rates go up, banks are going to be the benefactor of that. And And I don't know if Jim and I both had this, if we agreed on that or not. And Jim will chime in on that. But I think the whole banking sector is going to benefit from that. So I like this play. Put this back onto that 1 year new high, 5 year new high, another stock hitting a new high over the last 5 years. I think that's big. And look at the earnings per share. Look at the explosivity. That's in the book. That's in my book. As Jim calls it, my pamphlet. Let's go look at it. Let's go look at the explosiveness of the earnings per share right now. And that's I think that's direct correlation to knowing that interest rates are going to rise. So I like the bounce off, the RT bounce off of one and rising up. But again, a stock on a new 5-year high. I like it. I like the consolidation, breaking out of consolidation and moving higher. Jim?
Yeah, Todd and I are kind of on this same mindset here about the petroleum stocks, energy stocks, and with the banking industry. I love it. Glenn, change it back to a 1 year. I don't really care what happened 5 years ago. Right, and I like the idea that it had broke back through that support there, whatever date that was, just not too long ago, early January, late December. It broke through. Broke through the resistance, I should say, and has a nice move. I agree. We do agree that I am looking for bank stocks as the year progresses. This is hot stocks for the year, maybe not for today. It may not happen today, but I will just say, as Todd was talking, I pull up Bank of America. I have JP Morgan up on my screen, on my other screen. I think they're good plays. I do love the dividend play here because dividends is going to be something this year that's going to be important. Good quality utility stocks, dividend stocks, banking stocks. Again, maybe not today as we speak, but I think that's what's coming. So I like it.
Awesome. All right. Joey, take away, get Jim there we go. Cancel control and give it to Jim. All right. Jimmy. Hey, Jimmy, how you doing? Jim Penna is up next. Before you start, Jim, tell him who you are, what you do, and then he's going to get into his two stocks. Take it away, Jim.
Thank you, Glenn, and thank you, everybody, for taking the time to be with us today. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and like Todd, we came on just about the same time, so we're about 15 years in now. Just a quick background. Before coming to VectorVest, I was a market maker, traded stocks up in New York a long time ago, and 2 lifetimes ago, I was a police officer up in Connecticut. So I always joke that if at any point it sounds like I'm telling you what to do, that's usually where that comes from. And with that, first thing I'm going to do is auto fit these columns so we can see everything. There we go. Do I have control? I do have control. There we are. And if anyone's wondering, my avatar there is the cover of Jackson Browne's Late for the Sky album, if there's any Jackson Browne fans here. Okay, I'm talking about my stocks today. I'm looking at the 3 stocks that we haven't covered yet. So I have builders, First Sources, right? I'm really going out on a limb here because it is not only on top of the ruler stock search, but it's also the #1 stock as we speak in the VectorVest program on the stock viewer page. So I'm really going out on a limb with that one. I also am using Next Era. It is a utility stock, again, for what I am trying to plan for as the year progresses here. And, who knows, it could be wrong, but, the Fed chair said yesterday, if he needs to raise interest rates, he's going to. And was it this morning, Todd, or was it yesterday? The inflation numbers came out the highest in, 400 years or whatever it is, right? So this is what we're looking at. So I'm trying to kind of plan ahead here as opposed to, what's the best stock, today. And then finally, along those same lines, I've chosen GLD, bought gold. And just for transparency, I did go out and buy some call options on GLD yesterday as well. And so I do most of the time practice what I preach. So here's what I'm looking at. We'll start with BLDR. Again, relative value and safety. Glenn and Todd have already talked about the power of all these. So Very high numbers, excellent numbers on for Builder. And relative timing, obviously doing well. VST is up there. I love the comfort index and the growth rate. They all speak for themselves. This particular stock does not does not pay a dividend. Now, so if we're talking, one of the reasons I do really like Builders here also is that it's not, we're talking about momentum stocks, hot stocks for the year, for the month, for the week, whatever it's going to be. Right. So you've got your short-term momentum. If I come into a graph here real quick, we'll pull up a graph, and I don't know, do I have them here as well? Glenn, am I in the right spot to find?
Yep, keep going. All the way down. There you are.
There we go. Okay, and I really don't have anything special on my graphs here. Support and resistance is what I look at mostly. Where are the buyers? Where are the sellers? So to me, it's huge that the stock was able to. Well, I don't want a one-day graph. Let's put a one-year graph and start there. That the stock was able to break through that resistance level. Yes, it's coming back. It's testing again. It faded that big move there. But again, I'm looking at, I'm not really looking at it as a week over week trade here. I'm looking at a stock that is literally at the top of the list in the VectorVest program. Building products, I can still believe that the industry will continue to stay strong. So as I was saying, not only do you have the short-term momentum, okay, I think you because of the strong earnings per share, should be down here. I can add down there. Right, the earnings per share are very strong. And the earnings growth rate is through the roof at 39% per year in earnings growth rate. So I believe that those are going not only to put it in the short term, but in the longer term, depending how you define longer term, that the stock will continue to rise. And so to go back to, so that's the stock. Again, I don't have a lot on the graph. I don't have a bunch of moving averages or whatever. I'll focus on this. The fact that this next support is, I can't read that line for whatever reason, it's blurry, 73 and change.
73.38.
Yeah, which is fine. Not even 10%. If you allow it to go test that support area again, it's not even 10% to the downside. We'll see how the overall market moves. The stock is a buy. And so I like what the stock looks like here. I don't know if I showed it in the if I want to close it. Let's just minimize it. It also is an undervalued stock. So that's the third point here. So you got short-term momentum, strong earnings, what I believe for the longer term. And then finally, you do have an undervalued stock as well. So that's Builders. I really went out of my way and picked the top stock in the program.
We're going to analyze that stock, Todd and I, but before we do, how many of you own any of the stocks that we're talking about today? Type a 1 in the room. If you don't own any of these stocks in the room, type a 2 in the room. While you're doing that, Jim, bring up the graph on Builder for me again. Todd and I will give some insights on it, but I think that overall, looking at this listing of stocks, that so far we've done a good job with stocks. So I just wanted to see how many of you own them and how many of you do not. So I'm just going to keep my eye on that. But I think Builder is a great pick. I see the little bit of pullbacks on them, but the stock just continually does what you want it to do, which is what? Go up. I would, just like Jim said earlier, I would have some kind of stop mechanism in place to get me in and out at the right time. But the stock is doing exactly what you wanted to do. And look at that earnings per share. Just the most recent one after November going into December was just a huge pop. A huge pop. And no matter what, every time the stock seems like it wants to pull back down, the earnings keep going. Not in my house. That's Dikembe Mutombo. That's a Dikembe Mutombo earnings per share. Not in my house. So for the bears that are trying to push the stock down, but I think it's doing exactly what you wanted to do. Todd?
Yep, you have to like some of that price appreciation, the gapping price action, strong advance. It digests, of course, after that advance, but here we are getting another pop, perhaps. So on the price action itself, yeah, wide-ranging moves, but you can size appropriately to accommodate that. Maybe build a position over a couple tranches here as you get some continuation, and just keep watching the market,
There you go.
the larger builders market.
All right. Jim, move on to your next one, my friend.
Next up, let's guess we'll minimize that. Let's see, what did I have next? I had let's talk about NEE, or Next Era. So here I have one. Here's what I actually did for this one. I wanted to talk about a couple of things: utility stocks, dividend stocks. Again, bracing for what I believe is what's in store for us in the near future. So I want, more of a low beta. I want utilities. I want dividends. And so I combined it in this could have been any utility stock, by the way. I chose NEE. It's what's called a dividend aristocrat, trades on the S&P 500, has not only paid but grown its dividend every year for at least the last 25 years. Currently yielding 1.81%. It is in the, I believe it's water industry. I'm going to slide all the way over, so I'm sure here. It is actually utilities electric, so it's utility stock. Got a sales growth rate is good there. I believe it also has a good earnings growth rate of 19% per year. And as I said, I chose this stock because it was, again, on the dividend aristocrat list. So I like that. And I'm kind of conveying my thoughts on this with one stock, right? Utilities, financials. I could even put REITs up here if I wanted to. These are the kind of things that I'm going to look for in the coming weeks and months. If the Fed continues to raise rates and inflation's still where it is. So let's take a look at a graph of NEE. Not going to be too much here to look at. Again, this is not really a trade. Let me take earnings per shares on there. It's going to look a little choppy there for the 1 year. The stock prices might look a little choppy, but keep in mind these are $5 increments over the last year. It's hard to find any stock right over the last year that's gone straight up here. So it's held its support down here at around 71 and change is that lowest level of support. I don't know if I'm still in the same setting that I was using earlier, but just want to be sure. Did that come up, Glenn, on the other screen? The control panel for support and resistance. Maybe not. Glenn, if you're there.
What you trying to do?
I opened support and resistance. Did the control panel come up?
Hold on. There you go.
Yeah, okay.
It's on your setting.
Yeah, I just wanted to be sure.
Okay.
Because the reason I do that every time I open it now is because I've gotten some emails or calls because it looks different. So that's the only reason I remind everyone that I change it. If you use the default, these support and resistance lines are going to look different. Anyway, we've got support here. It has turned over a bit here. Again, I'm not looking to day trade this, right? So I'm going to put my entry points in based on the overall market. So I don't know, we have a green light in the price column, looking at my VectorVest program on the other screen here, where you have a green light in the price column. The market's trying to move up. Actually, obviously the primary trend is up as well. So we'll see where that leads us. And, it's headline driven, still an uncertain path that we're on. We'll wait to see. But as the weeks and months come by, I'm looking for dividend stocks and safer stocks. So that's why I chose Next Era. Could have been any utility stock with good numbers. Again, the graph isn't what's going to sell you on it here. That's why I chose that one.
For me, this is a nice transition into that conversation between risk on and risk off, right? So NEE is getting buffeted here by the winds of that mix, right? So as a defensive, right, utilities classic, and you can pretty much see the oscillations in its performance with whether the market is chasing safety or chasing growth. And for that reason, if you're looking for the defensive play, that's the place the place to go for it, and particularly because it's paying a good dividend. You know, on this pullback, the retracement is just about half of that prior move. So I'm really looking for some support at that top red line, whatever value that is. All right, that would be my my no-go gauge. But as you say, Jim, this is more of a position for you than it is a trade. So that works just fine. It's well suited for that defensive play, in my view.
I like that it's your utility. I like the diversification in your picks. The earnings per share, even on that pullback right now, the earnings per share for the most part is still rising. I'm with Todd that pullback is only about half of that move. That big move right there from, here to here, it's only halfway. And I like the rebound. That's a little bit lower than halfway, but I like the rebound nonetheless. Two strong open bars. Actually, I want to see, where's volume? Volume is slowing down a little bit. That's all right. Overall, big volume, whether it's up or down. It means it keeps showing that there's still conviction behind the move. Even this most recent bar is higher than some of these back here. So I like the volume on it as well as the open bars. Look at today's wick, though. It needs to start to getting out of its own way. It's got two levels of headwinds, 86.22 and 88.67. But I think that after all of this move, it does have the ability as an electric, as a utility. Heating is going to go up. Did you hear that we might even have a really, 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 really cold winter here in North Carolina? I keep hearing that. But I think electric and gas, for the most part, are going to go up nonetheless. So I do like the play. I like the rebound. I'd like to see it break above that level of resistance.
Great. Yeah. And again, I just want to reiterate that, there are other really good utility stocks. There are other choices to be made. And in fact, real quick, and I don't want to get too deep into it, but, another thing you can do is, why isn't it? There we go. XLU, you can get the ETF that tracks utilities. You want a safer play. And again, a lot of this is coming from more of a retirement minded, balancing a portfolio during certain times. I'm still going to buy good quality dividend stocks, good growth stocks, high RS stocks. But if you have positions and you're looking, you have, a great way to do it is just the XLU to do that with as well. And then finally, I was using gold. Again, it's still along the same line. We haven't heard much about gold recently. They talked about perhaps Bitcoin becoming the new hedge against inflation. I'm not buying that. Not to get into a discussion on on Bitcoin or crypto, but I believe that GLD is a good way to go. Again, maybe not today specifically, but we have gold up again. Like I said, I actually went out and bought calls on my own, and I think we're in a spot where, this could be a good time. So to use the way Todd phrased it, and I haven't used that phrase, but I guess it's kind of where I'm leaning. It is becoming more defensive for me. Again, coming from the mindset that I'm trying to convey. Listen, I have my own trading techniques, my short-term trades, but today I'm speaking more as the manager of retirement services than anything here. And again, it's a choppy graph on gold. You can pull up the Midas touch, the 1-year graph on gold if you want to. Usually we do it on the Huey, which is the Gold Bugs Index, which is the really it's the gold miners. But we can do this real quick. I'll bring up the Midas touch on GLD. I could bring up the Midas touch graph. And I'll take off the price because that's very choppy looking. And as you know, in Midas touch, we look at the 1 year, we have the 40-day moving average of relative timing. We have the 10-day moving average of the stop and the 65-day moving average of the stop price. All right. So even though the RT is still above 1, if I put the shorter term RT, what I'm seeing is at least it stays above 1 and has kind of tried to turn up there a little bit. So you can look at shorter term RT. You've got the 10-day moving up above the 65, if you want to use the Midas Touch look on it, it's what we do again on the Huey or the Gold Bugs Index. Again, that's the gold miners stocks as opposed to GLD. But again, I see the potential move for gold the same way I see utilities. And my one growth stock or momentum stock, I guess, for the day was the builder choice. And so I tried to hit a couple of different concepts with each stock that I used today.
Real quick,
And that's it.
Craig asked, is GLD tied to physical gold? My answer to that is no, it's the futures, so it's not tied to physical gold. Either one of y'all want to chime in on that? I don't think it's tied to physical gold.
I don't think so. Yeah. It's more the futures.
That's what I thought. I just wanted to make sure. Hey, Todd, what about Builder and Wire for us successful investors for tomorrow's coaching session, assuming follow through, of course? That comes from Ron.
Sure. The real quick pass, just bring them up, Glenn, if you're going to grab control back.
Okay.
So the successful investor approach is an extension of VectorVest Simple. We're looking for smooth, steady price and earnings performance, bottom left, upper right, smooth the better over that 1 year time frame is kind of our first filter. And then you want to look for, the solid fundamentals, et cetera. But we're looking at the graph first, and I don't see it yet, Glenn. I'm trying to vamp.
You trying to see the graph?
Yeah, I thought you were going to pull that up for me.
Oh, on
Builders first, and what was the other one?
Wire.
Just pull up VectorVest Simple. And take off RT.
Take off.
Stop. Take off stop and take off RT. All right, so here's what we're looking for, and this is a great successful investor kind of stock. Bottom left, upper right, smoother the better. Driven by rising earnings. So we're doing the same thing. You had a little consolidation there through the middle of the year, but you obviously have broken free of that and are in the nice uptrend. The last piece of this would be looking at two different time frames. We go to the 5 year. And then we go to the 3 month looking for our entry point. So, if you looked at the 5 year and you saw a prior resistance level, we avoid that. If you saw the earnings had flagged in that time frame, now it becomes a question, well, is the other stock you're considering any better? And then for your entry, you look at the price action, we are higher highs and higher lows. So we're still in trend. You want to, if you're going to enter it now off of that pivot, first of all, we're looking for a green light in the color guard, but assuming that you have that, then we're just looking for price to be hitting the higher high day over day. And we want to be clear of that resistance. So you probably have a couple bars here before we be too close to prior resistance.
Did it do it again?
No, this is...
Successful investor in a nutshell, right? That process, if I didn't talk you through it and you knew where you were going, well, that's a 15-second process. What was our other chart?
What was it?
Wire. Look at a 1 year. So you can see right there, we're consolidating, right? So that wedge that we already drew would be my analysis. I like the price structure, bottom left, upper right. It's just we're in a consolidation mode. So I want to buy on a successful investor approach. We want to buy the breakout.
And just
resumption of trend. We don't buy into the consolidation.
Just to let you guys know, Todd is going to be with me on Trending Thursday tomorrow to talk a little bit more about the successful investor methodology. So I'm just putting that out there for you. He will be a guest on Trending Thursday tomorrow. All right, Jim, are you
Looking
good?
forward to it.
Yeah. I just had a quick comment. Jay had already typed it in, and the question came up about GLD and physical gold. Jay already typed it in, but once I stopped talking, It is connected to physical gold, by the way.
Okay.
It's just it was a wrong answer I gave. So
All right.
GLD is connected to physical gold.
Excellent. All right.
And,
I didn't think it was, but that's why I turned to you two.
Yeah,
to
there's a
correct
lot of
me just in
nuances
case.
to it. I had Huey on the brain too, and but it is the short answer. I just wanted to clear that up real
Put
quick.
all three of us on, Joey. All right. So, again, if you haven't hit the like button already, please do so. If you like the content that these guys gave, I think that they brought really good stocks to the table. Looking forward to the year 2022. These are stocks definitely to consider. We've explained to you why. A lot of that was based off of the graphs, but a lot of that was based off of the things that you will only find in VectorVest. Our earnings per share is projected out. We looked at our indicators, relative value, relative safety, relative timing, to show you why we like them. Some of them had relative values above 1, but relative safeties below 1. Those are a little bit more aggressive plays. But if you look at the industries in the sectors that both Todd and Jim jumped aboard, I think that they were good plays. And the VectorVest system allows you to easily discern what industries and sectors are on the rise. When you have a tool like that that can bring that to the forefront, and when you have two guys like this that can manipulate that information for you and show you how to do it in a very easy fashion, it goes to show the value of the system and the power behind the system. Again, if you're not a member of our YouTube channel, don't forget to hit the subscribe button. If you're not a subscriber to the VectorVest software, we still offer a 99-cent trial for 30 days. Go to www.vectorvest.com/YT for YouTube, YT/YT, and you can take advantage of all the access that we showed you to this software for 99 cents for 30 days. All right, Glenn, you ate on like Fauci was yesterday. What? What are you saying? You are on. I don't know what that was. Very educational session and greatly appreciated. That came from Joff. Thank you for that. Is that a 50-day simple or exponential? That 50-day, on which graph? Normally, on my graph, it was a 50-day simple. Ray, if it was my graph, I used the 50-day simple. All right. And it's awesome that I saw how many people, it was a lot of ones in there, that people who were trading the stocks that we showed. So, you know what the cool thing about that is that we're not far off from the thinking that you have. And the system is right in line with finding you really good stocks. So Jim telling me that Wire was number 3 in one of our better searches in the whole software. All right. He knew that. Well, I didn't know that off the top of my head, but he knew that, which helps to back up the picks that we picked. They weren't just willy-nilly. And there was some really good thought behind what we did. All right. Jim or Todd, anything more you want to say before we sign off?
No, I'm good. Just stay safe, stay healthy. Thanks for taking the time, folks. We'll see you next time.
Todd?
Yeah, ditto that.
All right. So with that, folks, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, yasu. I picked up some other words from the Jockey Club this morning, and I forgot them. I got to remember them. But until next time, folks, see ya.